Hello, happy weekend. How are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex review and the rest of the markets review for the week starting on 5th to the 10th of August 2018. First of all, thank you very much for watching this video. I hope you enjoyed it, and I hope it's useful for you and helpful for you for your trading decisions during the week. So thank you very much for your time. If you enjoyed the video, please show your support back. Hit the like button below the video. Leave your feedback and your comment about the video. If there is any instrument you would like me to cover which I did not cover, so simply let me know and I will try to cover it as soon as possible. I'll try to cover always the most interesting ones as I see them for the coming week. So as you can see, I have a very pinky face, which you might wonder at the beginning, like, what the hell is going on with Vlad, right? So we had an amazing day today with my wife and my kids. We spent a lot on the summer, and you know, I was sure the summer is not so strong, so I didn't put some cream, but here is the revenge of the sun. Yeah, I know I look like a Peppa Pig Papa, the father Peppa Pig, but well, sorry for that. At least my voice is the same, yeah? Alright, so let's begin the previous week. I actually don't want, before we start the technical stuff, and I would like to share with you one of the comments I got this week, actually today, on Friday. I record this video earlier for this week simply because I will not be here. It's a holiday in Canada. On Monday it's a long weekend, so we will be away during the weekend. I will not be able to record any video, so I'll do it now on a Friday night. So whenever you watch that, I hope it's good for you and it's helpful for you. It's a bit early, but I want to share with you a feedback I got today which touched my heart big time from Ivan in the Traders Academy Club. Look at that. Well, for me it means say no more, for one simple reason. You know, it's when I know my knowledge of the charts and the way I see them and the way I look to trade them help other traders. For me it means the whole earth, and I feel proud, and really such comments, it goes directly to the heart. So Ivan, thank you very much if you are watching this video, and much appreciated. Thank you. And I hope again it helps you guys. Of course, no one could be always 100% right, not me and no one. It's impossible. But remember what I always say, trading is never about being right. Trading is about making money. So when you choose your trading directions, get the maximum you can with your strategies that you use and you apply out of the specific situations. So when you can define your direction, you do two things. One, you help yourself to focus in one direction and look set up to that direction. Second, you isolate yourself from watching for other directions which you don't want to trade. So yeah, maybe you will be wrong with choosing direction, maybe I'll be wrong with choosing direction, but at least I have a clear direction. In the worst case, I don't have setups in the direction I want. But if I'm right, I will find the setup in the direction I want and I will be able to trade it. So that's the importance of preparing the trading week or a month or a day for the short-term traders out of you, and go with that. Now I want to cover one more thing, because on Mondays we publish the weekly review, the video I do now, in a PDF format. And always on Tuesday I get a lot of questions, where is the PDF format? So guys, the PDF format comes to you in two variations. First of all, in this very link, just come back to this video, and on the description below you will find a link. Also, I will post it in the comments. Okay, so just come back and you get it. We publish it on Monday normally, because my team that prepares that come back to work on Monday. Okay, the guys make a great job, and this is what I'm talking about. This is right here. Okay, I'm sorry, just my nose is a bit itchy. So that's the link as you get that. Okay, and the idea here is very simple. You got here the pair. It's not a replacement for the video, because in the video I can go deep in explanation, but here you got the ideas, what we expect to happen. So the euro dollar, we expected to go sells, right, which actually worked beautifully this week. Pound dollar, we were bearish, we expected a new low. That was the invalidation plan for us. Dollar yen, we expected to go sells after rallies, which worked beautifully for us. EURCAD worked beautifully for us this week. I know many of you traded that, and I'm very happy. That was our plan from the beginning of the week. Go back to this area, right? We got here the bearish hit and divergence, and boom, a continuation all the way down. I'll discuss about it, of course. New Zealandian CAD, which worked out beautifully, and the gold, which becomes relevant today, actually. That was our plan. Now pay attention to these days. Okay, you see that? This is where we expected the retrace to start to happen. And now pay attention to that, because I'll be talking about it in this video. This is the third, as you can see. Right? So our crystal ball gave us this exactly day. It will be now interesting to see if it's a beginning of a rally, yes or no. I'll talk about it right now. So come back to this video, no, and watch the PDF to be published for you. I'll cover here the best instruments. I published it on Monday, okay? And I covered it here, the most interesting instruments as I see them. Sorry. As I see them, that could be commodities like natural gas, which also was very beautiful for us this week. So I hope you could enjoy that, guys. That was our plan. Drop down and buys, and this one worked beautiful. Anyway, so I show you that because I keep getting asked over and over again, where do I get the PDF? This PDF is for you. So the video is the first way. The second way is the newsletter, because I email about that. Just follow up your emails or the video on Monday with the link, and that's all. So now let's go to the fundamental. Non-farm payrolls was published on Friday, and we got a beautiful numbers in general. And it was a bit disappointing in terms of new additional jobs. Now we have a beautiful unemployment rate still holding below 4. That's pretty much good. This week is going to be less busy. And by the way, the FOMC did not hang the week, right? So that's what we have. It starts with the statement, the RBA rate statement in Australia, and the cash rate, which should not be changed most likely. Inflation expectation, in New Zealand, which follow on Wednesday the cash rate in New Zealand themselves. I would pay attention to that, of course. And mainly the GDP in Britain and CPI in the US. So that's what I will be paying attention to this week, the most interesting thing. So now let's go back to the Forex. Our view for the euro dollar was bearish because of the triangle. And basically because of that special cycle, we got a triangle ranging cycle. Our plan was to go for sales. Now, until when will that go for a sell, right? So the best part would be, of course, if we can get it like here somewhere. That would be simply classical, and from there we could expect turning bullish, right? But we do need to pay attention to the area here. It could easily turn to be a turnaround with a false break, right? Or a triple low, 1, 2, 3, and get us further rally. This is definitely a possibility, so I would not, as for now, I would not start to build up long-term plan. Oh, the euro dollar is going to be 1 again. No need to do that. Euro dollar can easily get us expansion towards, well, this is the maximum area of this cycle. It is around 113, 112. Okay, and yeah, it could go lower, but honestly, I don't see that doing that anymore. From my point of view, let's say I would not even be surprised if we stop a bit earlier, as I said, triple cycle. Anyway, our plan was and remains bearish at this stage. Our invalidation is that triangle top. We do want to see that going down to here to make our good cash out. I would start to pay attention for this divergence. In order for this divergence to become relevant, 4-hour chart, the lower time frames have to support that. So 4-hour chart should be with a divergence and a stoppage, and the 1-hour chart should stop. So as you can see, it can still go lower. Now, one of the possibilities here is that on the 1-hour chart we are building here some kind of a special cycle here, which will try to get us some kind of 2 waves retrace and further continuation. Or alternatively, it can make us, you know, the other corrective cycle, rather than 2 waves, is some kind of a range. Also a possibility, right? Exactly like we saw from the daily chart. So for me, it's still bearish until the other time frames will line up and finish the drop down. Pound dollar also could not yet manage to break the trend, could not yet make a false break with higher highs. So what to pay attention to right now? So first of all, the psychological level of 130, which is holding, right? That could be a beautiful stoppage here, maybe even false break, right? And some kind of a higher highs, and then we are after buys. If that happens, perfect. We are for both. We are for buys. But meanwhile, it did not happen. And according to the cycle levels, we can still see that going towards here. That's still a possibility. I don't think it has too much more where to go. It can easily block a double top or some false break, go for highs and fly. We have the GDP, we have the news to come more and more from the front pound this week. So once again, once the stoppage happens, several time frames, daily 4-hour for example and 1-hour make the confirmation, none of them did so far, or weekly, daily and 4-hour, that would be the place to stop. Meanwhile, it is still expected to be bearish. We still expect this target to be reached. If it doesn't continue the momentum and turn around the false break, look for the breakout, look for the double bottom, sorry, not top, double bottom bounce, turn around with bullish divergence, maybe false break, trend on breakout, higher highs, and then we are after buy the retraces. By the way, as per the Crystal Ball, a statistical indication that these days are critical. 4, 6, 8, 9, all the beginning of the next week. So that could be the beautiful turnaround. If it continues straight down, the next important time would be only on the week after, the second part of the week after, like I would even 15, 17 very powerful days, yeah, to pay attention to that. So the next one on the list is going to be the dollar yen, which we were bearish on on the previous week, as you remember from the report. And honestly, for me, it still remains bearish. The invalidation is here, the last high. Okay, and the idea is very simple: 2 waves correction. So sell rallies is still the plan. We should be going it and make it right here. Now, what could prevent that to happen is if the 4-hour chart basically make a stoppage for us, and here, and started to make it look like this. Okay, this could be a stoppage. If not, we are going for the next levels. Now, that's the ideal scenario. What could happen in this place is the fact that this was a double wave, right? Now it's double wave upside, so it could develop into double pattern for continuation. But look what does happen here: a trend line with a possible bullish hidden divergence between these two, right? So there is a chance we are going to make a rally from here. There is a chance for that. So I definitely want to see a break of the trend line, ideally lower lows as a confirmation for the sell continuation. I do remain bearish as long as the daily invalidation holds, aiming the zone of 110, 109 maybe, but this area is a support and a trend line and a bullish hidden divergence. If that holds, we might see the turnaround towards the next area. Pay attention, close attention to that. The next one on the list is the dollar Canadian, which I would like to show you. It's a very interesting opportunity from my point of view because it is now making the two waves correction here. We are now on the level of 100, and we have not too far away a level of the 161.8. I believe one of these areas is going to be a reversal. This is the first trend line. This is the second trend line. Right, a bit further, but this is the place the divergence starts to get and developing. We can see it going up right from the next zones. So what should be happening there on a 4-hour chart? We should face a cycle by itself, which well, not the best creating itself in terms of the movement. It's kind of stuck in two candles here. But we do have this critical area here, 161.8. Divergence is in place. So we do want to see the turnaround and higher highs to be created. And in that case, we would be looking to go for buys. If we continue to make slightly lower areas, then remember 129 and then slightly lower below 128, we would expect the turnaround to the buys. And that's where the statistics also come in play. Because we do have it now. Well, third was Friday, the beginning of the week, and if not, look where the next timing is: 11, 12, 14. Right, this is only a week after, and even 17, 18, 19, which is even a week after that. So that's why I say if it doesn't manage to make the return from these areas as we have them, we are going all the way lower, and that means continuing to sell. And that brings me to the other CAD pairs, which we have been shorting this week. EURCAD, we have been sell rallies, and the New Zealandian CAD. So the EURCAD is bringing us to the next destination area. We are aiming there most likely. Of course, the profits now are so beautiful, so we can push partial cash out and make the money here. But I think we are going all the way lower here. So short-term retraces could happen, yes, but it is still bearish all the way lower. Yes, it could go and pull back to these areas, maybe even back to the trend line, right? These areas, but for me it was and remains still bearish, and that's also connected to the Canadian, because if the dollar CAD, yeah, because it has a room, and that could be a great place. Kiwi CAD also was beautiful, bearish for us. It has a great level, so basically now my view is that we are now on a double cycle connection to 61.8. I think this is and the divergence developing. Yeah, we don't have any reversal as false breaks or anything, but this is a classical place to make money, right? Well, that's not money, but that's thumbs up for the beautiful move. So from my point of view, it's a place of a fight. We might start to see short-term retraces. For the longer term, I think we have lower areas to go down to. So I remain bearish here. As simple as that. News from New Zealand might be effective this week. Pay close attention to that. It starts to be very, very interesting. All right, next ones on the list, basically the EURUSD. And here we go. We got a triple cycle from the weekly. We are on top of the range. the divergence here is in play. We got a beautiful retrace here, which provided us the daily. Where is that? What did I do? Why my mouse is hardly moving? Okay, we have here the beautiful trend line, and it's holding, and it's bearish hidden divergence at that place. So and now it also looks like breaking the range. So from my point of view, it is sell the rallies. This top of the range is in the invalidation. I think the EURUSD might start its next bearish journey. Now what is important here is to pay attention. We continue with this structure. Lower lows, lower highs, right? And then sell rallies come, of course, as a relevant part. So I believe we are going to hear this zone or sell back from the trend lines should be good opportunity for some sells. Pound Aussie is basically the same. I think it has the room to take us towards, here we go. Okay, so 174.15, the 38.2, or the 171.50, which is the weekly cycle. It fits in with the expansion we would expect here. That's the ideal cube. So I expect it continue lower. So for me, it's sell the rallies. We do have some beautiful structure here, right? So basically sell the rallies. Invalidation, top of the range, and this last high as the invalidation area. So that's for the pounds CAD pairs we discussed about, and we love them. Quick reminder, Aussie Kiwi, a pair that we have in a couple of weeks. Not previous week I didn't talk about it, but a couple of weeks ago we did. Moving beautifully for us. Now on the top of the range, so for all those of you who are in these positions, I think it's great to make some money at these areas. A lot of news to come from Australia and New Zealand during this week. There is no reason to fight it. Try to be a hero, catch a big fish, make some partial cash out, stop loss to break even, and for the long run, let it go, because we might go for full expansion for duplication, which is slightly higher. Let me just mark it for you guys. Here you go. The next important level is 111.50, and that would fit in 2 cycles, as you can see, right here. So for long term, it looks like we have to go. I would at least move to break even. It looks like a correct thing to do here. Next one on the list is pound versus the franc, approaching some critical levels from my point of view, and I would start to pay attention to that. I'm talking about the 127, 126. It is the double cycle area here. Okay, this is 127, 128. To be more accurate, break below this low, and we can start looking for the buys. Okay, so pay attention to pound franc, which is also very interesting. Gold and silver are my final. Gold, as I showed you before, bounced for us from the statistical place on the first and third started to create for us the reversal. Now we have a false break right here, right? The moving averages gave us the divergence. So what we want to see is, for moderate aggressiveness, we want to see, well, we can see the whole trend line breaking. It would be very powerful, but at least the short one, right? We want to see that going above, but the ideal scenario would be the break of this high. If we manage to break this high, this is the plan. If it doesn't make it and just go below, this is the invalidation. If it goes below, put a big X on it, it's game over. So that's all. Natural gas from previous week paid us. For me, it remains bullish. It's a wonderful risk reward right now, so definitely can partial cash out, but for me it's long-term buys. A bit of the indices. German DAX was beautifully sell for us, but I want it to make new lows. It doesn't do it yet, and that's suspicious. So if we manage to break, this is the critical low, break below that, sell the rallies. If it holds, it can turn to be inside the range, and then everything is possible. And the NASDAQ, we were bearish at the beginning of the week. We got the very first zone. This was the first one we wanted, the 4-hour chart. Then we want to go lower based on the daily levels which we want to see. But there is one suspicious sign from here, and that's the fact that this triple double still did not break the trend line. We want the trend line to be broken. This is a reversal pattern, triple double. 3 waves down, 2 waves up retrace. It's a very serious retrace pattern. We want to see that breaking. If it doesn't break, what we would possibly get here in phase is we get one false break, so we might get second false break before the drop down comes back in the next portion. And that's basically all from the indices and the bitcoins and the cryptocurrencies. So we'll start with Ripple, which is refusing to break above this range yet. We're on the bottom of the range yet. It's holding, so this is the one I will pay attention to. We want it to see making higher highs, and then we can go and look for buys. Okay, we of course have the Bitcoin itself, which that's not Bitcoin, that's the one which now had a triple double for us. 1 2 3 1 2, right? So this becomes the critical area. I believe it should start to make some bullish divergence here and continue up, or first of all slightly lower back to the trend line, and then the rallies. Previous week we were following also, where is that? Here we were following the Ethereum to break to the downside of the triangle. Let me just find that. Here you go. This is a little range for us, but we managed to follow the plan, right? It breaks the move down to the area we wanted to see, right here. Okay, back to the trend line. Okay. Oh, that's 4 hour here. So here we go, right? So we managed to make the breakout here and go lower a bit than the triangle. So this is now becomes with the false breaks. So what we want to see for the buys is again basically higher highs and the trend line to be broken. It happens, we have a wonderful buy. And the one that we are following also from previous week is the Ethereum versus the Bitcoin, which is reaching a critical area, and I would expect that to start and slowly form the divergence and the reversals to the upside. So that's the best ones from my point of view as per cryptos as well. So let me just make sure I didn't miss anything. No, that's my hot list for the coming week. Again, I'm sorry I have to do it Friday night this weekend, as I will not be here around. Sorry it's very early, but my view is just to give you the chance to observe the interesting things for the coming week. And that's all. If you enjoyed the video, please hit the like button, leave your feedback. If there is any instrument, let me know. I try to cover the most interesting one as I see them during the week during the weekend for the coming week. Of course, on the live trading rooms we update that on daily basis. So if you are not yet part of the Traders Academy Club, you are more than invited. You have the invitation link, 7 free trial days. Come, watch, see what we are doing, how we are doing, why we are doing, and I hope it's helpful for you. As simple as that. So that's all. Thank you for watching the Peppa Pig Vlad with my pinky face this weekend, and thank you very much for your time. I wish you a wonderful weekend. For all the Canadian followers, happy long weekend, guys, and enjoy your time. I'll see you in the live trading rooms in the Traders Academy Club. Enjoy your time, and thank you for watching once again. Yours, Vladimir Ribakov, Traders Academy Club.